Hi, this is Jackie Schoelerman with Schoelerman Group of Coldwell Banker, your Silicon Valley connections. Today I'm with Ron Ricard. He is with 1031 Exchange, IPX, specialist in the Silicon Valley to do 1031 exchange. So we thought that today we're going to discuss what 1031 exchange is and what the rules and regulations are, and let the expert to tell us all about it.
Fantastic.
All right, so go ahead and start.
All right, well 1031 just refers to the section of the tax code that allows you to sell investment real estate and buy replacement investment real estate. And as long as you follow the rules, you get to defer paying taxes on the profit that you've made. So you have a rental house, you've been renting it for the last few years, you want to sell that and buy a duplex, a fourplex. You sell the property, you buy the replacement. As long as you use what's called an intermediary, you get to defer taxes. Now there are three questions that always get asked that are the three important things to realize in the 1031. What can I buy? How long do I have? How much do I need to spend? So the first one, what can I buy? The answer is any kind of investment real estate anywhere in the United States. Now it does have to be business or investment real estate, so not a property for development or a property for your personal use. But it can be any kind of investment real estate, commercial, residential, agricultural, no problem. Second thing is, how long do you have to do it? You have 45 days from the close of escrow to identify what you're going to buy, and 180 days to close escrow. So those are the important dates to remember. You need to know what you're going to buy within 45 days, though you do have almost 6 months to close escrow on it. Third thing, how much do you need to spend? The answer is very simple, all of it. Not just the equity, not just the profit, all of it. If you sell for $1 million, you need to buy for at least $1 million. If you buy less, you pay tax on the difference. That's referred to as boot. But as a rule, people don't want to pay taxes. They want to buy property equal or greater in value.
Okay, all right. Are there any recent tax laws pertaining to exchange that perhaps they're brand new and the investors should know about it?
Well, in today, what's very relevant is that Congress is debating changes to the tax code, tax cuts in particular, and there has been some debate whether 1031 was going to survive, actually. And right now it appears that what's being proposed in Congress would not affect 1031 exchanges for real estate. Now you can also do exchanges currently on personal property like airplanes and boats and hotel equipment, that kind of stuff. That may change, may even go away. But what's being proposed right now would have no effect on real estate. So the 1031 rules that we've been working with for the last 25 years are still in effect.
So how long do you have to hold this investment property in order to qualify for 1031 exchange?
Before you do what with it?
To sell it and then replace it with another investment properties.
The key is you need to buy the property with the intention of it being an investment. And so what does that really mean? Well, to be really safe, you probably want to rent it for 2 years.
Okay.
Now that said, some accountants are a little more aggressive, so it's really between you and your accountant. The key is that you don't want to make it look like a flip, because if you're flipping property, that does not qualify as investment real estate. So just as long as it doesn't look like a flip, you should be okay.
Okay, so let's say, for example, I've owned this property, say, for 5 years, but I lived in it for a year or two, and then I rented it for the last 3 years. Mm-hmm. Would that qualify?
Well, the key is, there are two things there. First is the last use of the property. If the last use of the property is you living there, then it does not qualify. If the last use of the property is as a rental, then yes, it does qualify. Now, there is something really important in today in the market you're serving here in Menlo Park, Palo Alto area, is that we have a lot of people here whose gain on the property is well above the $250,000, $500,000 exclusion that they're allowed to keep. If you've had to rent a property that you've been living in for 10, 20, 30 years and have huge gains in that property, way above what you're allowed to keep tax-free, what a lot of people are doing right now is moving out of the property, renting it for, I'll say, 18 months, 2 years. Now when they sell the property, its last use is investment, so it qualifies.
Okay.
But more importantly, it still meets the criteria of having lived in the property 2 of the last 5 years, which is what the tax code says. And because of that, you could take advantage of both tax rules at the same time. So let's say you bought the property years ago for $500,000, today it's worth $2 million. You rent the property for a couple of years. Now when you sell it for $2 million, you get to keep the $500,000, assuming you're married, and you could do a 1031 exchange on the remaining $1.5 million.
Okay.
So it's a way to combine the 1031 with the primary residence exclusion.
Oh, interesting. And then do you have to exchange it for like kinds? Can you go from residential investments, sell residential, and then go back and buy retail and commercial investments?
Yeah.
And vice versa?
Right, yeah, commercial to residential, as long as it's investment real estate. So when we say residential, I'm talking about rental residential, basically, or if it's single family, it's rentals, duplex, fourplex, apartment buildings. Yeah, that's all, or commercial real estate, agricultural real estate, bare land, all qualifies.
So what are the fees involved? I mean, how do you get paid?
The cost for the exchange is very small. I mean,
Is it?
It's $850 when you sell the property and $250 when you buy the new property. So for $1,100, you're doing the whole transaction. It in the grand scheme of things, that's a very small price.
All right. And then, and you went through the timing.
Right.
How long?
Right. And that 45 days really is critical because there's no extensions and no exceptions. You really need to know what you're going to buy in those 45 days, and you cannot change your mind after the 45 days.
Okay. Anything else as a investor or first-time person who is trying to do 1031 exchange that you should advise them to do? And how do you hold their hands, and how do you guide them through the whole process?
Well, what I always suggest is whenever you want to do an exchange, first thing is talk to somebody knowledgeable, talk to an intermediary, just so you're comfortable how the rules are going to affect you, what you want to accomplish without having to pay the tax man every single time. So the first thing is make sure that you're comfortable how the rules affect you on your transaction. So engage the intermediary even before you list the property to make sure that what you want to do will qualify and that you're comfortable with the timelines. And because I've had clients who sometimes want to keep a little bit of money and not reinvest everything. That's okay, as long as you know you're going to pay tax on that amount. So again, get yourself educated, and then work with a good agent, obviously, who will listen to what your needs are, and if you need a little bit longer escrow or what you're looking for from the buyer. And other than that, there's really not much more involved. You're just selling something, you're buying something, and our job is just to hold the money in between.
Okay, and are you part of a title company, or do you work with different title companies?
We work with our company works with everybody. We are the sister company locally to Chicago Title and Lawyers Title and Fidelity Title.
Right.
However, I've been doing this almost 16 years. I know every escrow officer in San Mateo and Santa Clara County.
Okay.
But the key about being backed by a big company is, we're holding your money.
Right.
We're holding sometimes millions of dollars of your money. You want to make sure that money is being protected. And so, working with a Fortune 300 company, hundreds of millions of bonding, of insurance, of corporate guarantees is very important, because a lot of exchange companies have very little backing because we're not a regulated industry.
So Ron, for the audience who would like to do the 1031 exchange, how do they get hold of you?
I have a simple phone number, 408-483-1031. You can call me at any time. That's my cell phone. We also have a great website, IPX1031.com. Our company is Investment Property Exchange, so IPX1031.com has great information, lots to read if you want to read ahead of time. And I'm here to answer your questions.
Great. Well, here it is. We learned so much about 1031 exchange. I'm Jackie Schoelerman, as I mentioned, with Schoelerman Group, your Silicon Valley connections. I would love to get your feedback, your comments. Please either give me a call. My phone number is 650-855-9700, or you can send me an email, jackie@schoelerman.com. I really look forward to get your comments. And also let me know who else you would like for me to interview for the next few weeks or so. Well, have a wonderful day and talk to you soon.